Good morning and very warm welcome to our fortnightly market outlook webinar. I'm Devarsh and I'm joined by my two colleagues, Vinay and Ajit, for this webinar. Good morning, Vinay. Ajit, how are you doing?
I'm doing good, sir. Good morning. Welcome to
Good.
this market outlook webinar.
All right, so first I will start. I'll speak about the international markets and what has happened into American markets over the last 1 week. What is the positioning there? And then I will also show you tables about the international indices, how they are doing. Then I'll hand it over to Vinay. Vinay will speak about Indian markets from technical charts perspective. Then he will hand it over to Ajit. He will speak about the derivative insights. So without further ado, let's start. So US stocks, they started very weak this first half of the week. They fell about 1.5% on Tuesday. From Wednesday, there was a Fed meeting. In that Fed meeting, Fed FOMC chairman Jerome Powell allied fears that the highly anticipated interest rate cuts won't be cancelled. There were fears that now there won't be any interest rate cut. Now market is expecting almost 60 to 70% cut is percentage probability is now that there will be interest rate cut this year. This probability also got a boost on Friday when April jobs data, which is very important data, came in, and the job data was weaker than expected. So economy is slowing down, and that is actually good news for the stock market, and that has helped the stock market going up on Friday. Several mega tech companies like Apple, Amazon have pushed the US indices higher. In fact, Apple has announced the highest ever buyback in the history of US markets. Another problem which we had was higher crude oil prices. They have also dropped, and gold is also coming down as the geopolitical uncertainty is coming down. So as you can see from the screen, the 1 month data is little lower for the American markets, but last fortnight they have bounced back. The highlight of this fortnight and this month is the Chinese market. It has rebounded very sharply. Hang Seng index is up about 13% over the last fortnight. Other European markets are also strong. Indian markets, as we have been pointing out, last fortnight also, the Sensex is up about 1.5% to 1%, while mid cap and small cap are up sharply. And that's where the action is. That's where my colleagues will also elaborate. It is better to be stock specific and sector specific right now. PSU, power and metal are the highlights. They are up about 8 to 5%. Technology stocks are struggling and they are near flat line. Now, for market to resume its rally, we would the banking and IT are the major chunk of the market. Unless these two perform, we will not be able to rise from here. So we'll watch out for how IT performs from here. Let's talk about the foreign buying. Gradually, they have been steady. The rolling 12-month data suggests that for the last 6 months, their buying and selling is averaging out. Now, if we look at next year, whether interest rate will be cut in this financial year or not, and usually people think that the general consensus in the street is that the RBI will have to follow the Fed. We are of the opinion that eventually for the first 1 or 2 cut, RBI may follow the US, but Indian fundamentals, especially the balance sheet, is so strong that they may not have to completely or blindly follow the US Fed. India can chart its own path from here. Why? Because we are going to see a huge forex reserves. There are expectations that for FY25 we will end up having $700 billion of forex reserves. About $25 billion are expected through FDI and about 50 are expected through net portfolio. Debt market is the one which will have a huge flows, and that will also help the Indian market and balance of payment. And that's why we are going to have a very strong balance sheet of the Reserve Bank. We will have a very strong the reserves condition, and that means that our currency may not depreciate that much, even if there is any global uncertainty. So Indian fundamentals, the government balance sheet or the RBI balance sheet is strong. We have a strong earnings, and that's why our markets are trading near all-time highs. We may see some consolidation over the next fortnight, and my colleagues will share more about how markets are poised over the next fortnight. But overall, it is advisable to remain stock specific, remain sector specific now. Now, which are the sectors to focus, which stocks to focus? I'll invite my colleague Vinay to take it forward. Over to you, Vinay.
Yeah, Devarsh, please allow. Yeah. Yeah. Yeah.
Go
So
ahead.
good morning, all of. Yeah. So good morning, all of you. And my name is Vinay Rajani. I'm going to take you through the technical development on Indian markets. I will also talk about the sectors which are looking good technically, and we will also go through the intermarket analysis and global market technical setup. So without much ado, let us start the slides. Now, this is a Nifty daily chart. This is a short-term chart, we can say. And yesterday we saw that on Friday, we Nifty made an all-time high near 22,800 and sharply fell. More than 400 points fall was there after hitting an all-time high of 22,794. And if we were to see the history, in the month of April, we saw that Nifty made a high around 22,775. Again, 3 days back, we saw that Nifty made an high at 22,780, and again 22,794 was the high. So this is called a triple top formation, and it becomes a strong resistance as far as short-term outlook for the Nifty is concerned. So 22,800 becomes a strong resistance. Now it is called a triple top resistance. Once we see Nifty moving above this level, we can expect sharp short covering again, and again it will be a blue sky territory after this level is crossed, and above that level 22,800 we can expect even a target of 23,500, but that is conditional. As of now, this has acted as a strong resistance, so we have to give respect to it. So this will act as a short-term resistance for the Nifty. Now let us look at where supports are lies in the Nifty. So from the 19th April bottom, which was around 21,777, there was an issue, geopolitical issue, when we saw a big fall in the Nifty. Around 1,000 points fall was there when Israel and Iran war was there. And after that, Nifty made a bottom at 21,777. And from that level, Nifty again made a new all-time high. So that means more than 1,000 points recovery, and all-time high was registered recently. And if I were to take a retracement level, so this entire 1,000-point rally, the retracement of 38.2% comes in at 22,400, where we saw Nifty reached that level in yesterday's session. So 22,400 is a crucial level for the short term in the spot market. Once we see Nifty below that 22,400, the next support lies in at 22,286, which happens to be the 50% retracement. And in the worst case scenario, and on the technical basis, 61.8% retracement comes in at 22,166. So these are the important support for the Nifty. Right, the short-term support lies at 22,400 odd levels, below that 22,286, and then 22,166. These are the Fibonacci retracement levels, which in history we saw that acted as a strong support and resistance. That is why we are giving respect to it. So this is our view. Right now, Nifty fell from the all-time high, but support are also there, so they can act as a reversal for the Nifty as far as short-term is concerned. Now let us look at the weekly chart of the Nifty. Now in weekly chart, we can see this is a doji, long doji candlestick formation is there on the weekly. So what does this say, indicates? So doji indicates the indecision of the trend. So right now there is a fight between bulls and bears, and there is no directional trend for the market. But though we registered an all-time high recently, so primary trend is up, but for the short term, even bulls and bears both are confused and they are actually fighting. So it might result into some consolidation in the market. So as we can see over here, for last 7-8 weeks, Nifty is going nowhere. It is into a consolidation, we can say. So on the higher side, 22,800, on the downside 22,200 level can act as a support for the Nifty. So we may see a Nifty moving and oscillating in this particular range, on the upside 22,800 and on the downside 22,200. So this is the range we are expecting, especially after looking at the formation of doji on the weekly chart. Now let us look at a Bank Nifty chart. Now Bank Nifty has registered a rally of more than 4,500 points from the bottom of 19th April. So nice recovery was there, and all-time high was registered, almost 50,000 Bank Nifty touched. And after that, in last 3 sessions, we have seen a running correction. Now if we were to take the retracement of the entire rise, then in yesterday's session we witnessed that Bank Nifty retraced 38.2% of the entire rally, which was around 48,700 odd level, and bounced back from the that level in the last 1 hour. So that's a good sign. Bank Nifty is trying to take support at 38.2% retracement. So 48,700 becomes the very strong support as far as Bank Nifty is concerned, and nice recovery was also registered after that in last 1 hour. So this is the level which we have to see. If in any case, if we see any level below 48,700, then we may see Bank Nifty moving down towards the 42,300 odd level and 47,900 level, which happens to be the 50% and 61.8% retracement. So these are the important levels we need to track. But looking at the recovery in last 1 hour from the 38.2% retracement, it looks like that there is a bright chances that Bank Nifty will recover from here. So we need to give respect to the 48,700 as a strong support, and that should be kept as a stop loss also as far as short-term trading is concerned. So recent top was registered around 50,000, so that may remain a resistance for the short term. So it might happen that for the couple of session or 3-4 sessions, Bank Nifty moves in the range of 48,600 to 50,000. So that 1,500 point range we need to track for the Bank Nifty. So we can say Bank Nifty is down from the recent highs, but it is still not out. Primary trend is still positive. Now let us look at the weekly chart of the Bank Nifty. So this is a line chart on the basis of closing prices. It is formed, and we can clearly observe that Bank Nifty is making higher tops and higher bottoms on the weekly chart, and almost on the weekly basis Bank Nifty closed at the all-time high. And this RSI oscillator is also bullish on the weekly charts. That indicates that the primary trend of the Bank Nifty is clearly bullish, though we have seen a running correction in last 3 days. But if you were to look at the closing price of the weekly, it clearly suggests that higher top, higher bottoms are still there. And on the weekly basis, Bank Nifty has closed at the highest level. So that's a very good sign. Positional trend of the Bank Nifty remains very strong, and it might happen that there are good bright chances that at lower level, the supports which I mentioned can act as a reversal level anytime soon, and ultimately Bank Nifty will move on the upside. Now let us discuss about the broader market. Now this is a Nifty Small Cap 100 index chart, and this is a trend line which joins the previous swing lows. So this was the bottom of March 2024. So this is a March bottom, then this is the April bottom. If we adjoin this trend line, the upward sloping trend line, we saw that on Friday in yesterday's session, small cap index found support near this trend line and witnessed some recovery. So in last 4 days, nothing has happened. It is clearly a consolidation. We saw Bank Nifty and Nifty falling drastically from the recent high, but if you were to look at the small cap index, it is purely a consolidation in last 4 days. So broader market remained very resilient in last 3-4 sessions, though there was a sharp correction in the Nifty and Bank Nifty and other benchmark indices, but this small cap index remain into consolidation. That's a good sign. Like broader markets are performing well, and there is no sign of panic can be seen on the chart. And this was a double top resistance which was taken out recently, and it might happen that it for the time being it may consolidate, but ultimate trend should remain on the upside only, because a big breakout which was registered a couple of weeks back can again resume on the upside. So overall setup, the small cap index is looking very strong, and they can outperform in the coming times. Now let us look at the Nifty Micro Cap Index, which comprises of 250 stocks which are over and above NSE 500 index. So this is also indicates the broader market setup. Now here also we can see this upward sloping trend line adjoining the March bottom and April bottom. This acted as a support on the in the yesterday's session, and this was also a gap support. So the previous top resistance was there, and that acted as a support here, and this gap also acted as a support, and this another evidence is the upward sloping trend line. So multiple evidences of support was there, in yesterday's session, on Friday's session, we saw that this acted as a strong support for the micro cap index, and it witnessed a bounce back. So there is a good chance that again after forming a 5 red candle, micro cap index will resume its uptrend. So we need to see whether this 20,600 as a support working for the micro cap index or not. So this will remain a stop loss for the mid cap and micro cap index. So the level of this micro cap index is 20,600, which is a strong support, and that we need to track. Now let us look at some breadth indicators. So this is a Nifty 500 chart. This is a price chart, and we can see that it is clearly going up with a higher tops and higher bottom formation and near the all-time high. And this is another breadth indicator, which in the beneath we can see that number of stocks, the percentage of stocks which are trading above the 200 DMA. So right now the number of percentage of stocks which are above 200 DMA is 78%, which can be considered as a very healthy sign, because despite the global weakness and the geopolitical issues which arised in the month of April, we can see that this percentage of stocks above 200 DMA in NSE 500 still holds around 80%. So 80% of the stocks are above 200 DMA, which is a very good sign, and this can continue to help the Indian markets to outperform in the coming days. So as far as breadth is concerned, it is very strong for the Indian market, and especially the broader markets like NSE 500. Now let us discuss some sectors which can outperform the Nifty in the coming times. So I have taken a monthly ratio chart. A ratio chart is nothing but dividing a one underlying with the another underlying. So I have taken one underlying called BSE Metal Index, and I have divided with the Sensex. So BSE Metal Index divided by Sensex, this is a ratio chart of that, and we can see that this is a clear-cut downward sloping channel, downward sloping trend line adjoining the monthly swing high, and this was a clear-cut breakout which we witnessed couple of weeks back, and after that it is into continuation of an uptrend. So that trend line breakout was witnessed, and it is into continuation. So it might happen that as compared to Nifty, metal index will do well, and in yesterday's session also we saw that some metal and mining stocks continued to do well, like NMDC and Coal India, and many of the metal and mining stocks performed very well. So this is the evidence behind that, and we can expect outperformance to continue in the coming times in the metal and mining index. The another sector which looks promising on the chart is the PSU Bank Index. Now this is again a monthly ratio chart. So I have divided the NSE PSU Bank Index with the Nifty. So this monthly ratio chart of PSU Bank divided by Nifty suggests that there was a breakout a couple of months back, and after that it registered a follow-up rally, and recently another resistance is taken out on the chart. So this clearly indicates that even though we have seen a nice recovery from a lower level in the PSU Bank Index, but that outperformance may continue in the coming times, and we can expect PSU Bank Index to outperform the Nifty in the coming weeks and months also, because the positional setup is quite strong, and this is not a daily chart, this is a monthly ratio chart which gives the clear picture for the medium to long term. So these are the two sectors, metal and PSU Bank Index, which we need to track, and we can expect an outperformance from that. Now this is one global index I have taken. This is the MSCI Emerging Market Index, and it is a weekly chart. And as we can see over here, there was a long consolidation. So since 2022, this index did not go anywhere. It remained in the range. It attempted a new high here, the 52-week high here, but failed here, and again came down, again took support here, and again went up. So for a long time, since 2022, this index was into a long consolidation. And here we can see recently this upward sloping, the horizontal trend line which is drawn here, red color trend line, this index has actually attempted a breakout from this particular trend line. So some follow-up buying again in this index from here will give a clear-cut breakout from the long-term consolidation. That means that the emerging markets in the global in the world can do well from here. And what are those emerging markets? If you were to take the weights of the MSCI emerging markets, so Chinese market is the highest weighted index in that. So 26% weight of the China is there, followed by India, which is having 18% index, 18% weightage, followed by Taiwan 17%, and then Korea 12%. So these are the top weights indices, and the equity markets which are the constituents of MSCI Emerging Market Index. So this will again help the Indian markets going forward, because we have seen that Asian as well as the emerging market indices did not surpass the 2021 high and actually underperformed the developed markets. So this is the evidence which I can see on the chart, on the weekly chart of emerging market index, and we can expect that in the coming times emerging market will outperform the world developed markets. So this is a good indication again and good setup as far as Indian market is concerned. Now let us talk a brief about the elections, as we are passing through the election time and voting is going on in different states, in different cities. So in the history we have seen that 6 months before the result date of the election, if we buy Nifty, then the average return in last 5 Lok Sabha election has been every time has been positive, and the on the upside optimistic scenario was 36% positive return if we buy a 6 month if we buy Nifty 6 months before, and the lowest return was 9%. So average return of last 5 Lok Sabha election, 6 month pre-election pre-result performance was very good, and the average return was 21%. Since we have passed almost 5 months and we are almost on the in the 4th June we will get the result of election, so that period is over. But if you were to look at the post 6 month performance of the result, then also it remained very positive. In the last 5 Lok Sabha election, we have seen that 6 month post result, all the time the positive returns were there from the Nifty, and average return for last 5 Lok Sabha election post 6 month results has been 14%. That's a very good indication. So if you were to look at the overall scenario in next 6 months, we may expect Nifty to do well also. For the 1 month, 2 month consolidation and choppiness would be there around the results. So we are into that period that overall Nifty did not move on the either side. So it is a time of consolidation, we may say, in the Nifty. But if you were to look at the longer term scenario, 6 months after the result, election result, we can expect a good returns in the Nifty. So 6 months before and 6 months after the results, Nifty performed well, at least looking at the history. So that's a good scenario for the investors. Now let us conclude. Nifty has formed a triple top resistance around 22,800. So unless that is taken out, we can expect a consolidation. Below 22,400, which is 38.2% retracement, supports for the Nifty are seen at 22,286 and 22,166. Doji candlestick formation on the weekly chart indicates that there is an indecision in the trend, and for the time being we can consolidate and oscillate between the some supports and resistance that we have mentioned. So expect Nifty to oscillate in the range of 22,200 to 22,800. Bank Nifty has retraced 38.2% at 48,700. Supports below 48,700 is 48,300 and 47,900 odd level. So these are the important levels. You can note down this level because overall trend of the Bank Nifty is positive. It is just a correction, and anytime soon we can expect Bank Nifty to resume its uptrend. So as I said, positional trend of the Bank Nifty is intact. NSE small cap 100 and micro cap 250 indices, which are the broader market indices, holding their uptrend well and reaches the crucial support zone. So we can expect these indices to bounce back from here. Breadth of the market is very strong, as 78% of the stocks are trading above the 200 DMA in NSE 500 index. Emerging market index is on the verge of a big breakout. So expect emerging markets to outperform the developed market in the coming times. Metals and PSU bank indices are expected to outperform the benchmark indices like Nifty and Sensex as far as short term is concerned. And as I said, that Lok Sabha elections, for five Lok Sabha elections, markets have obliged with the 6 month pre-election and 6 month post-election election rally. So we have to give this seasonality respect also. So this also suggests that overall market should remain bullish, and for the short term we have to follow the levels. So this is what I wanted to share on the basis of technicals. Now my colleague Ajit will share insight about the derivative developments in Indian markets. Ajit, over to you.
Can you see my screen? Yeah, Vinay?
Yeah, you can go ahead. You are visible.
Yeah, thank you, Vinay, for very insightful information about the market from technical perspective. And also, we know that election results are very much nearby, and you have given also given a broader idea how the market performs after and before, post, and pre-election. So now let us dwell into the market by looking the derivative data. So derivative data gives us a very short-term kind of a perspective to the market compared to technicals. So let's now understand what the market has done in the week, and based on that information, how it will perform in upcoming sessions. So we have seen long build-up in Nifty futures during the week, which is a very good indication, and where we have seen 2.49% open interest going up, by Nifty going up by 0.25%. Even there was a massive long build up in Bank Nifty, where we have seen 18% rise in the open interest, by Bank Nifty going up by 1.50%. And the call writing has taken place at 22,700 and 22,800, put writing at 22,400 level. For us, this piece of information plays a very important role, because when we club the technical aspects and the derivative aspects, we can gauge the market movement. We all know that by looking at the technical aspect, that the short term and the intermediate and the long term perspective of the market is bullish. The trend is very bullish. So what we need to do, whenever the trend is bullish, whenever there is a correction in the market, we have to look for the support areas. So this piece of information provides us those support and the resistance area. So whenever the market is bullish, we'll focus more on the support, and whenever market is bearish, we'll look for the resistance, because in the bullish market, there is high chances that this support plays a very crucial role. So if you look at the market, our futures is at 22,500, and but the put writing has taken place at 22,500 and 400 level. So this suggests that in coming sessions, in the coming week, a market will take support, and there is high probability that market will bounce from 22,500 to 22,400 level. So from this piece of information, what we can do is, we do not look for much shorting whenever the market approaches this level. Instead, we'll look for some bullish confirmation, and we'll look for the buying, we'll look for the buying opportunities. And our target will set for 22,700 to 22,800. Why? Because we have seen a huge call writing which has taken place at 22,700 and 22,800. So what will happen once these important crucial levels are taken out? Then we have a call writing at 23,000 level. 23,000 level. So from this small piece of information, we now got an idea that we'll take a buying. We'll look for the buying opportunities for 22,400 to 500 level, and look for 22,700 to 20,800 level. Being 22,800 a resistance zone breakout. If market breaks out from that level, then we'll look for 23,000 level. And now the smart money, the FIs, we call it as a smart money. So what they have done, so this gives an additional advantage to go with the trend. So we have seen long build up in the FIs, and also long build up is seen in the stock futures. So both index futures and stock futures, they have created a long position, where they have bought 3,696 crore worth, by open interest going up by 38,214 contracts. And in case of stock futures, they have bought 3,763 crore, where open interest have gone up by 124907 contracts. So this is a good indication. So we now know that whenever market is approaching the support area, we have to think from a long position perspective. Even if we look at the FI's long to short ratio, their long to short ratio has gone up, and 30th and on 30th April and 2nd of May, they have actually gone above 1. So it means they have created more long position than short position. Yesterday, due to some correction, and there was some global news, there might be some profit booking in them, but overall they have created long position. So if we club whatever information we have from a derivative perspective, that is long build up in Nifty, put writing at 22,400 and 22,500 level, long build up by FIs in the index and the stock future segment, what we can do is, we can keep a stop loss of 22,400 level, and on the higher side we can look for 22,700 to 22,800 as a target, because it is an intermediate resistance. In bull market, the resistance are taken off easily. So there is chances that if market stays positive for the entire week, we may break that resistance area. And in case of Bank Nifty, we can hold Bank Nifty with a stop loss of 48,500 level, where we have seen long build-up in the Bank Nifty as well. And put writing has taken place at 48,500 to 48,000 level. So this area will act as a strong support. On the higher side, we have seen call writing at 49,500 to 50,000 level. Because we have seen some sort of correction from those level, there was a supply kind of a scenario which has taken place. So we expect that market may retrace and test this supply area, but we need to see how the supply absorption take place. If it absorb easily, then there is high chances that Bank Nifty also outperform this week, because last week Bank Nifty has outperformed the and from a sectoral point of view, Vinay has showed one interesting chart of metal. If we combine that ratio chart with the open interest data also, here we can see that open interest has gone up in the metal, and even the prices of the metal stocks are going up. So combining this, there is a bullish sentiment as well as a price pattern breakout on a metal sector. So in coming weeks, we can look in the metal, look for the stocks in a bullish opportunity for metals. Even auto and cement stocks are looking good as per the information we have from open interest and price data. Thank you, everyone. Over to you.
Yeah, Devarsh, are you there?
Yeah, am I audible?
Yes, you are audible,
Yes,
Devarsh.
sir, you're audible.
Okay. So now, if you have any questions, we'll try to answer as many as possible. Depending upon the screen you are using, you can press the question mark symbol and type in your question. We'll answer it. Meanwhile, by the time the question queue assembles, let me ask one question each to both of you. So Ajit, from the derivative perspective, from your analysis, if somebody were to look at one sector for long and short, can you share which one sector one can look at over the next fortnight?
Yes, sir. For positive sector, one can definitely look for metal sector, because we have a lot of positive data in that sector. And to be very conservative and cautious, if we want to be, IT is one of those sectors that we need to be cautious on the long side. Because many IT stocks, they are breaking on the charts, as well as open interest data is also suggesting there is some sort of short buildup in those sectors. So these will be two top sectors to look for long and short.
Right. So Satya Sahu is asking how about technology stocks. So Ajit just answered that right now the technology stocks are the weakest among the index, and that's where if there are opportunity to short for the very short term, we can look at it. Over the longer term, results have season is already over. Most of the IT companies have announced results, so there the immediate triggers are over. Vinay, you have mentioned the metal as one of the sectors where BSC metal index is clearly breaking out compared to the Sensex.
Yes, definitely. So metal index or a ratio chart, as I discussed, that if we divide the BSE metal index with the Sensex, there is a clear-cut breakout on the monthly ratio chart that gives the picture of the medium to long term. So there could be a short-term correction anytime, but if we were to look at the overall outperformance, we can expect metal sector to do well, because ratio chart indicates the broader scenario, and it clearly indicates that metal sector should outperform the Nifty as well as Sensex in the coming time.
Right. Many questions are there about the how to hedge the portfolio. So we will be coming out with a detailed strategy over the next fortnightly market outlook webinar, where we will share how to hedge the portfolio against the election volatility. Mr. Ashu is asking that whether volatility is expected. Yes, depending upon the seats won by the ruling coalition, there will be volatility. There will be first volatility on the exit poll, and then there will be again volatility on the actual results. So these two events will have to get it right. And also, it is always advisable to create some cash in the long-term portfolio before such a large event. Markets have already run up. We have already gone up quite a lot. So it is better to create some cash which we can be deployed during the volatility. It is also important to keep the margins on your leverage account. If you are trading in e-margin or on cash or on derivative side on stock futures, it is better to keep some margin to navigate the volatile period. I hope this has been useful. We have almost answered all the questions. If you have any question, you can always get in touch with us and we'll be more than happy to answer. Thank you, Ajit. Thank you, Vinay. And by this, we'll conclude this webinar.
Thank you, Devarsh.
Thank you.
Thank you.